once, I do it again. Add it up, bankroll, euro, peso.
Alright, hey everybody. Sorry, we've got some catching up to do. It's been a couple days since I've made a video. And the day that I can get back to work, goodness gracious. Blackstone bets $6 billion with a B on buying and renting homes. So they're actually doing a deal here with Home Partners of America. They are the owners of over 17,000 houses in the US. And this is just getting a little bit outrageous. I mean, first up, I would just like to know, why do you guys think that they're kind of letting all of this become open now? You know what? Let me actually fix this a little bit so you can see it just a tad bit better. I'm trying to quickly get through some videos since we're trying to do catch up, so work with me here. Editing's not going to be perfect. All right, so Blackstone Group. This is different. A little bit different from BlackRock. Totally different company here. They have agreed to buy a company that buys and rents single-family homes in a $6 billion deal. This is showing signs that Wall Street believes the U.S. housing market is going to stay hot. And this is a little bit... Let me just get into why I think that this is concerning. I know that the other video that I did kind of based on this, I was called a fearmonger, but understand that my concern here, I don't want anybody going out and rushing into a home. All right? Even if you've been sitting on the sidelines for a while, I would wait myself to see what happens here, but at the same time, we need to look at what's going on, and there is a chance that this hot housing market could last a little bit longer, right? And even if we see a slight drop, just a slight drop, that doesn't necessarily mean that you're really going to have any big savings in the long run. So please, I'm not trying to be a fearmonger. I'm just trying to show you both sides of the story here. I thought for years that we would have an epic collapse in the housing market, and it hasn't happened yet. That doesn't mean that it's not going to happen, but it could go on a little bit longer. And when I say a little bit longer, when you've got these giant companies coming in and buying up all of these properties, well, a little bit longer could mean another 2 years. It could mean another 10 years or more. I'm not sure. So the investment firm confirmed Tuesday that it has reached a deal to acquire Home Partners of America, Inc. So they do own 17,000 houses throughout the U.S. And you've got to think that Blackstone is probably going to buy more. Doing a bit more reading, you will find that they are getting back into real estate. They had actually dumped most of their real estate holdings in anything that they had, I believe in 2019, and now they're going to start buying back up again. Oh, man. So the company that they're buying, Home Partners, they buy homes and they rent them out, but they also offer its tenants the chance to eventually buy. So rent to own sort of strategy here, I'm not really sure, but you've got to think that as rents get higher and mortgages get higher, people actually might just choose to rent. And depending on where you live at, that could be good or bad. Again, I don't want to be looked at as some kind of fearmonger. I'm just trying to show you what I'm learning, kind of process it. We can all process it together. There's things that I can learn through you guys commenting in the comments, you know, and maybe I can see things from another perspective. Just currently right now, I am really, really concerned with this, especially with the fact that Blackstone, I just found out today, I actually just learned about this today. Blackstone offers a, what is it, rent-backed securities, like renter-backed securities. It's the same as mortgage-backed securities, but it's with rent, and it all gets tied up together and nice and neatly packaged. So rent-backed securities and mortgage-backed securities could be in the same little bundle. And I find this to be interesting. They started this back in 2014. So you kind of have to wonder if they knew that they had plans to do this that far back. It is a possibility. I'm not super sure. And I don't feel very comfortable talking about this just yet as far as the mortgage-backed securities or rent-backed securities. But I find it very odd, kind of conniving, and just straight up fraudulent. I don't know how to explain it to you yet. I still need to wrap my head around it, but all I know is it gives me this weird feeling in my stomach that things could go really, really bad. And I need to dive a little deeper into that before I even start to talk to you guys about this. But the first thing that comes to my mind is it's fraudulent. It's messed up. The entire system is rigged, and it's rigged against us. So we need to kind of find out how to, find our place within this system. Sometimes that means that you need to play the game a little bit to get ahead. Yeah, I'm not really sure. I'll get back to you guys on that. So that supply demand imbalance will not be fixed overnight. This is what Kathleen McCarthy, global co-head of Blackstone Real Estate, said. And we do kind of have a supply demand issue right now. And the concerning thing is, if house prices were going to start to fall, how far could they go? Because, even if we were up for a while, the slightest little downturn could really start to freak people out. And people that are sitting on the sidelines right now, if they start to notice, which we've actually got an article that we're going to talk about that, because month over month, home sales are down. Prices could eventually come down. And if people that are waiting on the sidelines see this, as long as they don't jump too soon into a house, there is a good possibility that you might be able to get into something that you could afford if you had been sitting on the sidelines. Now, we all got different ideas of what we could afford or what you're willing to pay, and I might talk about that a little bit later in this video. So in 2019, Blackstone exited the single-family rental business when it sold its last shares of Invitation Homes. I do believe that they actually were funded by JP Morgan, which had become the largest U.S. firm in the industry with 80,000 homes for lease. The firm put its toe back in the market in 2020 by investing $240 million to buy a preferred quality stake in Toronto's Tricon Residential. So that's interesting. I mean, we know that Toronto's housing market is... America's behind Canada, okay? So this is what concerns me, is we seem to be following their same footsteps. And if you've got Blackstone investing in Toronto, which is already an incredibly hot market, I'm concerned that we could see the same here in the US. And that doesn't necessarily mean it's a good thing, Corporations, foreign buyers, people getting FOMO, just fear of missing out and overpaying for a home, or maybe paying a little bit more than I think that they should be paying, or you might think that they should be paying. This could go on for quite a while. So Tricon Residential actually buys single-family rentals in North America. I almost said BlackRock. Blackstone is rejoining an expanding roster of Wall Street powerhouses that have acquired single-family rental companies. Canadian property giant, Brookfield Asset Management recently acquired a stake in a landlord that owns more than 10,000 U.S. homes. JP Morgan Asset Management and Rockpoint Group, LLC, have also made big investments in single-family units. Now, this is a problem, because they are becoming your landlord here, right? And again, the idea that they all could provide you, or a good bit of these companies could provide you, mortgage-backed securities, a way to invest in, again, that rental-backed securities, it just puts a really weird knot in my stomach. I can't speak on that. I just know that it's not a good thing. It can't be. For all of their recent activity, big institutional investors own about 300,000 U.S. homes, or only 2% of single-family rental homes. So not a huge number, not a big deal necessarily right now, but I'm looking 10 years into the future with the pace that they're at today. This is what concerns me. Now, this is according to a report by New York-based financial firm Amherst Pierpont? I'm not sure. About 85% of the single-family rental market is owned by investors with 10 or fewer properties. So my concern here, remember in the last video, again, not trying to be a fearmonger, but if they were to, let's say, purposefully, or let's say something that they could point their finger at that caused a bit of a shakeup in the housing world, right? 85% of the single-family rental market is owned by investors with 10 or fewer properties. Now, most of the people that I hear from, Most of the people that I know that have rentals, they still have a mortgage on that home, right? And they don't have a lot of flexibility with their rent necessarily as to what they charge. So if there was some kind of shakeup in the housing market, you could definitely say that JP Morgan, BlackRock, Blackstone, any of these large institutional investors, they're going to do the same thing that they did back in the day. All right. And that's buying up homes for pennies on the dollar. They would be able to shake out most of these other investors, right, with the 10 or fewer properties. I think it would actually be pretty easy to shake these people out of the market. Those that have mortgages completely paid off, they're going to do okay. I think that they would be able to survive this. You also have, more opportunity whenever there's not a mortgage on that home, because even if you had to slash your rent in half, all right, you could do it. The thing that you really need to be concerned with is just paying taxes on that property. And as long as you can pay those taxes, well, you can hold it, you can own it, you can, continue to have renters at that property. So I just wonder about this. There's a lot of people that have gotten into real estate over the years, and honestly, with how many people that you hear of, I'm sure we all know a couple of people that are real estate agents. There's actually more agents out there than there are homes for sale. Yikes, hello. Some of these people could actually kind of get shooken out of the market here. So that's the first article that I have for us. Again, I'm not doing any fancy editing today. All of these will be in the description below though, so don't worry about that. And let's see, I do still have my notes here. So this one, U.S. existing home prices hit record high in May. Year-over-year price increase is the biggest recorded in Real Estate Group's data going back to 1999. Wow. That's just crazy. Oh my gosh. All right, let's see here. What do I have here? All right, so homes that are for sale are moving quickly. The typical home that sold in May spent 17 days on the market, matching the record low reached in April. That's insane. The typical home that sold in May spent 17 days on the market. Now, I don't know exactly. They are getting this from National Association of Realtors. I wonder if maybe this information could be skewed a little bit. I'm not positive. I wouldn't doubt it. I wouldn't doubt it that somebody's fudging the numbers here a little bit. But the fact that most of these homes were only on the market for 17 days kind of freaks me out. This is telling us that people do have FOMO. They don't care about overpaying. They're not looking for deals. They're just trying to grab something, right? So that's kind of concerning to me. Another thing, now I actually kind of see this as being positive. Just over half of existing home buyers in May who use mortgages put at least 20% down. So this is somewhat encouraging to me. I definitely think that the bare minimum that you should be putting down on a home is 20%. Now, if you have just had life come down on you hard, I'm not going to get onto anybody necessarily for putting that 5 or 10% down. I actually know some people that have put less than that down. To a degree, it could be understandable. To a degree, if you're saving money, like if your mortgage is cheaper than what you could do for rent, that makes sense to me. But at the same time, truly, to be responsible, let's try our best to get that 20% down or greater. Because remember, you want the best interest rate possible, right? And on top of that, when you put more down, you're paying less monthly, okay? So it's kind of good to get that big chunk out of the way in the beginning. This does give me a little bit of confidence, though, that maybe most people are able to handle what they are getting into. Now, the other concerning factor here is that so many people are getting outbid and they're frustrated that they're unable to buy. So we actually have a lot of people that are, they're throwing their hands up. They're saying, you know what, I'm out. I'm done. I don't want to do this anymore. I've been outbid 2, 3, 4, 5 times, and I'm just going to continue to rent. So we've got more of those people coming into the sidelines. Like, they don't want to get into this mess, and I don't blame them. I think that the responsible thing to do is to sit back a little bit, assess what's going on. If you can work from home, if there's something that you can do on your computer or online, whatever it may be, I think that you should look for options in other areas of the country. If you can be flexible, then be flexible. There's no point in staying in California, New York. Texas is going crazy now. There's no point in staying in some of these places if you don't have to, right? So also keep in mind, if you are one of these people, your job can be pretty flexible. You can work from home. Try looking for other states, other areas where it might be a little bit cheaper. Maybe you could save a little bit more on taxes. Weigh out all the pros and cons for your area and where you might want to go to. So mortgage applications for home purchases have slowed this spring, another sign that a number of buyers are holding off. Applications actually fell 17% from a year earlier in the week that ended June 11th, according to the Mortgage Bankers Association. So this is interesting. There are a lot of people that are saying, you know what? I want to get out. I don't want to be a part of this bidding war. I'm not going to fall into the FOMO. I am just going to wait. And I kind of think that this is a smart move. Assess your situation. I could see both sides of this. I could see total collapse, or I could just see inflation going astronomical and home prices following this. Again, guys, my big fear here is not necessarily the normal everyday people buying into these markets. I know that they're not helping. They're definitely not helping with home prices out there. But my big concern here is the fangs coming out on Wall Street. Why are they so wrapped up in homes right now? Now, yeah, we got to see that it was only 2%. They only own 2% of homes on the market, 300,000 homes, right? That's from what we know. There actually could be more. Those numbers could be skewed as well. There could be more. But my concern is what happens when they own 3 million of these homes. Right? We're just seeing the beginning of this. For some reason, the news wants us to see this. They want us to know that Wall Street is interested. Maybe that actually helps pick up the FOMO. So that way home prices maybe don't slump too low, or people do get the FOMO and have to get in. All right, so check this out. This is also scary to me. This is a couple, Jennifer Rubin and Matthew Snyder. Okay. So they lost out on 11 offers before having one accepted for a 4-bedroom house in Shoreline, Washington. This is insane. We were competing with people that were willing to put $250,000 on top of the asking price. Holy cow. Miss Rubin said this. It was really stressful and emotionally draining to constantly be rejected from offer after offer. Good golly. Yeah. This is what you don't want to compete with, okay? If you are that person on the sidelines, please don't jump in like this. Please don't. When there are people that are willing to put on top of what the asking price already is, they're like, hey, we'll go $250,000 more than what you're asking. Of course, they're likely to get the offer accepted, but this is just stupidity on top of stupidity, right? Like, when do people start to realize that you're fueling your own problems at this point? If enough people were to sit back on the sidelines, well, home prices would almost have to come down. Whatever you choose to do, that's on you. Okay, so let me make sure you guys can actually see this. Sorry about that. Home builders are trying to crank out more supply to meet the booming demand. Doesn't that sound familiar? Housing starts. A measure of U.S. home building rose 3.6% in May from April, the Commerce Department said last week. Builders are limited, however, by land supply, construction, and material cost, and the supply imbalance shows no near-term sign of meaningfully easing. Residential permits, which can be a bellwether for home construction, fell 3% last month from the previous month. All right. That's a whole, in this one paragraph, we have a whole slew of issues here. So in some areas, not necessarily where I live, but in some areas, land is not very abundant. And the price of land has also been going up, just like the price on homes have been going up. Land price is kind of crazy right now too. All right, construction. Let's break down construction. You've got people that are being paid to stay at home. Now, even if we get back to, everybody who wants a job, has a job, whatever it is, Even once we get back to that, we're not going to be doing great. But for as long as we are giving people money to sit at home, they are not going to come back to work. So already that's an issue in construction. You've got fewer workers. It's going to take you longer to build those homes, and you're probably having to pay those people a little bit more just to keep them on the job. And you better hope that it's actually skilled labor. At this point, I would be kind of nervous to be in a newly built home because I have to wonder, was it skilled labor or did they just get anybody that, would actually pick up a hammer and some nails? I don't know. All right, so material costs. Now, we actually have seen the cost of lumber come down a little bit. I think you've seen the cost of copper and steel come down just a little bit, right? So there was at one point that I actually mentioned that we could be in a commodity super cycle. I'm not positive if we're in the green yet. I'm not positive if we're out of this yet. This all depends on the next couple of months. How other people see inflation, if deflation is coming. All of this comes together, okay? And they seem to be talking a whole lot on the news. The Fed actually spoke today. Jerome Powell speaking today. They kind of want to talk about this whole virus thing more than anything else. It's very easy to point the fingers at, right? Can't talk about that too much on this channel, but you guys know that at any point there could be a new strain. All right? So let me just throw that in there in case you haven't thought about it at all. We could go through part 2 of all of this BS that we've gone through. All right? So I just want to keep that out there. Whether you think it's inflation or deflation, I think any scenario is possible. We could see both of them at the same time in different sectors. And yeah, let's just hope that they don't pull round 2 on us with a new strain, right? All right, so the number of homes selling that were priced over $1 million more than doubled in May compared with a year earlier. Now, this is just insane to me. This is really insane to me. But we do have people that are making, as far as investors go, we do have people that are making more money than ever. Bitcoin did hit 65,000. Maybe people, hopefully some, I really hope that a good bit of those people sold. No, you don't necessarily know that you're at the top when you're there, but come on. Once prices are getting this outrageous, know when to pull back a little bit, right? So I do find that to be pretty interesting. $1 million homes. Yes, home prices are up a good bit, but I also just wonder, can people's paychecks actually keep up to this? It's actually crazy if you got to go out and look around. You think that these people are well off. Wow, they have $1 million home, and little do you know, they're living paycheck to paycheck and probably eating great value food. No, I don't want anybody to feel like I'm dissing on them for, eating great value food. We've been there before. There's no problem with that. Using coupons and things like that. Use them when you can. But you would actually be surprised because so many people want to keep up with the Joneses. They don't own that car. They'll likely never own the house. And they are literally living paycheck to paycheck. They could be having a very nice and comfortable life. A very comfortable life. And I want that to be a big part of this channel, guys. Always, always, always live below your means so you can be comfortable. And if you're at a point where you're not making a whole lot, and things are still uncomfortable, you don't have that room. I do understand that there's a lot of people out there that have absolutely no flexibility, right? This is tough because people don't want to hear it, and typically they're so far in life they don't think that they can do it. If it's already like that, to pick up the slack a little bit, find something that you can do online, part-time. I'm not going to necessarily say investing, but even if you make only a little bit, I think that a small proportion of whatever you make should be invested into something. Gold and silver being my number one, because at least if anything and all goes wrong, you still have an asset that actually is worth something, okay? But let's try our best not to be those people that do have the flashy home, the flashy car, and all the flashy clothes, yet they don't know how they're going to pay their bills next month, all right? Nobody on this channel should be living that way. Let's do our best not to do that. All right, so I don't care about the record high in home prices. We just went over why all that is so insane. But sales declined for a 4th month in a row. Now, give me just a second because my computer messed some things up for me here. All right, there we go. All right, the National Association of Realtors reported that the median sale price of a home in May rose at the greatest year-over-year price since at least 1999. Now, we did hear that earlier. The price increase comes from a high buyer demand, and scarce homes for sale have actually fueled the highly competitive housing market. Now, we've actually talked about this before. I do believe that banks and other institutions are likely holding on to certain homes, make sure that the supply is limited. It works out for them, right? Because you're paying more for a home, and even if interest rates are so low, that home price is so high that you're still, I mean, they're going to be getting a good bit out of the interest. All right? They're making some nice money here. On our last live stream, I talked about, and I'm sorry if I didn't make this very clear. I kind of want to clear this up right now. If you bought a home today, I read some article that said that the average home price was $380,000. So if you bought a home today for $380,000, and most of the people that I know right now that have excellent credit, they've got really good credit, right? Whether they're buying or building, it seems like their interest rate is going to be around 4.4, maybe 4.5%. And that's coming from a pool of, 3 or 4 different people that I know, couples. Again, stellar credit, older in age. They should be getting the best that they can get. So $380,000 at 4.4% over 30 years. Your home, you will have paid almost $1 million. It's 700 and something $1,000. So a good bit of that is in interest, right? That's too high for me. Even with the really low interest rates, that's too high. I think that that's too much. All right, so the drop in sorry, I just wanted to clear that up before I get going again. I think someone might have misheard me, or I genuinely did not make myself clear enough in the last live stream. I just think that it's insane that you would be paying almost $1 million for your home after 30 years. Now that is principal and interest. I just think that that's outrageous, and that's why I also think that you should be paying off debts as soon as you can. I know that there's a lot of people that like to work with their debt, but at the same time, I think that I would like to do that cautiously. Is there debt on our home? Yes, there is debt on our home. But typically we're paying double what we need to pay each month. Some months, it's not as good. We do work for ourselves, work online. If some months aren't as good, or maybe we do want to invest a little bit more somewhere else, then yeah, we still, you're just paying the minimum. But typically we try to pay that off as soon as we can, the mortgage at least. You want to get that paid off ASAP. I don't necessarily believe in trying to inflate away the debt, I guess you could say. Most people aren't actually in a position to be able to do that. The people that are able to do that are the extremely wealthy, or those who are very, very good at investing. And I will say it is possible with investing, but I don't count on my investing being able to beat that. And I don't really see the point with it, right? I could just pay it off sooner than later. Just a little bit of advice, not trying to harp on anybody. This goes on to say the drop in existing home sales represents the 4th month in a row of declines, Yun said Tuesday. It looks like that big wave surge that we saw after lifting on the lockdown in the second half of last year is clearly receding, Yun said. The sales are essentially returning towards pre-pandemic activity. Okay. All right, so in the event of price declines, Yun said that they are unlikely to last. If the prices were to decline, there's an army of potential home buyers viewing it as a second chance opportunity. All right, so this is what I was talking about earlier. If we do see a slight decline in home prices, I think that it would be best if those people that have been sitting on the sidelines, the potential home buyers, I think if we saw a slight slip, what I would like to see is for everybody to just keep sitting on the sidelines, because then you could get an even better deal as home prices slip more. Most people won't do that. The moment that home prices go down, they're going to jump on this. All right? So I would say that if you have been waiting, be stubborn. We were stubborn. We were patient. It took 5 or 6 years before we got into a home. And the reason for that is because we had a budget and we stuck to that budget. There was For no reason would we go above that. But that also does not mean that you sacrifice what you want out of that, right? If you want a 3-bedroom home, stick to that. Don't settle for 2. Don't settle for a smaller yard. Don't settle for anything. Stick to what you want. It might take a good bit of time. Maybe keep saving some money during that period, just to give you a little bit more flexibility, or even be able to put a larger down payment on a home that you want that is within your budget. But this is just a couple of tips for you. You know, I know that people are going to jump on this as soon as they see home prices go down. My hope is that maybe people will continue sitting on the sidelines and we could see home prices come down a little bit more. Now, do I want an all-out crash? No, not necessarily. But for those of you that are trying to get into a home, I understand this. You want something to call your own. You don't want to be a renter for the rest of your life. I totally get that. So just think about everything cautiously. Don't get wrapped up in the FOMO. All right, so let's see here. Why did I highlight this? Builder confidence as measured by the National Association of Home Builders declined in May on worries of higher material cost and lower availability. All right, so there we go. The higher material cost. Again, I don't know if we're out of the possible inflation in materials just yet. I think that all of this just depends. And it depends on a number. We could literally do a whole separate video on why that matters. But as far as material costs go, I'm not really sure. I mean, they could absolutely sink, or I am still concerned that we could be in some sort of phase going towards that commodity super cycle. I'm just not positive at this point, guys. So just stay patient. Whatever you're doing, continue to be patient. I think that everything will work out for the best. Just keep your head on a swivel. Stay stubborn. I don't want to be a fearmonger to anybody. Nobody at all. That's not the goal, but I do want to see both sides, both possibilities, and just be ready for anything, right? So thank you guys for watching. I know this one was kind of long, and I'll catch you in the next one. Bye, guys.
I do it again. Add it up, bankroll.